Hello, welcome to another edition of the Crypto Club and Digital Assets weekly catch up on Zoom. It is Sunday, the 6th of October 2024, and for those who've not been along to any of these sessions before, stick around. We never know quite what we're going to be talking about. Content really depends upon who joins us, and sessions are open to everybody, novices and experts alike. So come and join us at a future session. There's details in the link below on how you can register. Topics typically cover things like blockchain, DeFi, NFTs, ICOs, CBDCs, even though they're not strictly cryptocurrencies, but they are linked. We also talk about stable coins and global regulation as well. Hope you enjoy this. Let's see who's going to come and join us today. Hey, Gabriella, welcome back.
Hey, hello.
How are you today?
I'm okay, thank you. How are you tonight?
I'm good. Looking forward to another interesting evening of conversation.
Sure.
Did you enjoy last week?
Absolutely. Like
Uh,
always. Yes, thank you very much for asking.
uh, that's good. It was fascinating to cover the various regulatory positions around different countries and that, and hearing what's going on around the world and everything. That was
Mhm.
great. And we're joined by another one, MB. Good evening, MB. So, how are things going with the algorithm development?
Yeah, so basically, I've reached a point where I'm kind of doing some final testing on some stuff with the Nasdaq, and so I've narrowed it down to my two. I've got lots of different systems which I've tested over the years. At the moment, on the Nasdaq, I've got it down to two systems, and then I'll make a selection on which one I'm going to use. So
Okay.
what I've actually got to do is pass a test with a US broker. So I went with a company called Apex initially, but Apex have had some bad reviews. So the idea is that you pass a simulator test and then they give you a live account to trade. So you don't
Okay.
have to put up your own capital. But there have been complaints with Apex trading, Apex funded trader, that people have been passing the tests. Experienced traders are actually making money and they've been denying them payouts. So in some cases, it's some obscure rule in terms of something called dollar cost averaging. So if you enter a position on a futures market and it's dropping against you, let's say
Mhm.
you're buying gold or crude oil or whatever. In my case, it's the Nasdaq I'm looking at, but it's dropping, and you decide to buy more in the expectations that it's going to actually eventually rise in the
Yep.
next minute or so, or whenever. But Apex don't allow dollar cost averaging, or they allow a limited version of it. So you're allowed to get in once after your initial position, but not again. And
Okay.
some people have been caught out by that, but other people have said that what Apex has started to do is deny payouts. So it's supposed to be a 90-10 split. So you keep 90% of the profit, they keep 10%. That's their motivation for obviously doing the whole thing.
Okay.
But what they've started to do now is that people who have made the money, stuck to the rules. Apparently, they've said things like, "We want to see video recording of your trades, that you were actually making the trades and not some algo or somebody
Okay.
else making the trades for you." And that's obviously deterring the good traders because they don't want to give away their trading algos or their methods.
Yep.
And what people are thinking is that they are actually their revenue stream. And this is something that anyone who's in this space has got to watch out for. Their revenue stream is from people losing money. Like myself, historically have been in terms of you're paying monthly fees to use their platform in the
Hmm.
expectation that you eventually pass a test and start generating some revenue. But you could be there for years paying monthly fees, $50 or whatever it is, depending on what type of account size you pick. You never actually make any money, but they're making millions out of people doing this. And what's actually possibly happened with Apex is that I know that they're not really in the crypto space, but what people think has happened is that their financials have got messed up so that the profitable traders are now draining their capital. And so they've started to suffocate the profitable traders. And they're just happy to have the losing traders paying them monthly fees without actually making any money. So,
Because it's kind of funny. I saw this a number of years ago in the traditional um, trading market. So mainly around share trading, but some currencies and that as well. And I used to go to events that the likes of Charles Schwab or Cantor or any other big players would put on, and that they were all quite open about it. How it was that typically 80 to 85% of the participants would lose
retail
money.
traders make lose money. Yep.
Yeah, and it was always around the psychology that everyone always thought they were about to be one of the 15%, and so they'd keep putting money in. And the
Yeah, and
reality
actually,
was,
I had a
yeah,
relative who tried trading. Is one of my uncles from London, and he's a little bit older than me. And he tried trading some years ago, and he got lucky at some points just buying stocks like BT and holding them for extended periods because he used to work for BT, and made hundreds of thousands of pounds just from holding stocks over an extended period. But in terms of trading, short-term trading like Forex, he never made it. Maybe, I mean, what I'm testing at the moment is actually looking quite encouraging. So I hope to be in a week's time to have the conversation that I'm actually ready and I should be able to get a handful of good trades every day. And what I would aim for is I've moved over to a company called I won't keep you too long on this, but
No, sir.
it's interested in this Top Step, who are in the same space. So it's a proprietary trading firm in the US. I think you can trade crypto, possibly crypto futures. I think you can trade crypto futures. So it does have an overlap with crypto.
Okay.
So you can trade things like Bitcoin futures. But the idea is whatever you select your instrument, you've got to make a certain amount of profit. So the account I've selected, I've got to make 3,000 profit to get a funded account. Well, it's actually three stages. So you make $3,000 profit without losing $2,000. Otherwise, you fail the test and you have to restart. And then you move over to an express account, which is sort of halfway house between a simulation and fully live. And then once you pass that test, you're then fully live. So if all goes according to plan, I should be talking to you in a month's time saying I've sailed through all the tests and now
Excellent.
I'm printing money. But let's see. But for anyone who's interested, Top Step, I think, have got good reviews. They've been in the space for a long time. They do have crypto. So in terms of you can trade things like Bitcoin futures. The other thing I just thought I'd mention, I know less to do with the algo, but more to do with the regulation space, is I watched an Amazon Prime documentary about FTX Capital. So if you remember a few weeks ago, I mentioned that I'd been listening to an Amazon Audible account of Sam Bankman-Fried and everything that went wrong. And I think Ken actually mentioned a few things at the time. But there is a 1 hour program on Amazon Prime for anyone who's interested. I can't remember what it's called, but if you look it up, if you look up FTX or crypto, you'll find it. But it's only about an hour long, and it goes through things like the regulation. And what I found fascinating was that FTX had a US arm which was fully audited, but then they had about 100 different companies all over the place, including the Bahamas. And so it was very difficult to police exactly what was going on. And then, obviously this diversion of funds by Sam Bankman-Fried in terms of using investor capital as his own sort of spending money to do as he wished. That's where they kind of came a cropper. So
the whole commingling of funds and linking in with Alameda Capital and that, it's an interesting. It's definitely if there are any programs on it, it's worth watching. I just want to say hi. We've just been joined by Ken and Perry as well. Hey, Perry.
Yeah. Hi.
So Ken's come off mute. That's always good. Perry, you're going to say hi.
Hi everyone. I hope you're doing well.
Hey. I think, is this the first time you've joined us, Perry?
Yeah, it's the first time I've joined. Basically, I'm the founder of Capital Forge, and I reside in Cameroon, in Yaoundé. It's an African country. And I was recommended this by Jeremy Sosabowski.
Yeah.
Yeah, so he recommended I take part in these events as I could benefit from the insights as well as share my own insights. Because we're currently doing some interesting things here. And it would be nice to get yours ideas and, we could collaborate and stuff.
Excellent. Well, that's great. And that's what these sessions are all about. So the topics we cover, that we try to keep them obviously crypto related, but that's such a wide range as to whether that is like, we were talking a moment ago about algo trading, which funnily enough, you mentioned, Jeremy, there's kind of an overlap there, and crypto trading in general. But also we look at things like the blockchain level, so the actual technology layer. So Ken, who's with us, is heavily, I think, into the blockchain layer of things. I think it's fair to say. Gabriella, who's joined us over from Spain, has a real interest around the Web3 space, and we get people who join us who might be into NFTs or blockchain projects or crypto projects or whatever. So I'm sure stick around, Perry, and you'll find things of interest. And do feel feel free to join in the conversation as well. It's good to have you join us.
Thank you very much. Thank you for the warm welcome.
Yeah. So you're saying you're Cameroon based. So we were talking last week about a lot of regulatory perspectives, because obviously in the UK we've got the FCA, in Abu Dhabi they've got ADGM and so on. But just fascinated, what's the crypto regulation space in Cameroon and the rest of Africa?
Well, to be very honest, in that aspect, it's really uncertain. You see, like especially in Cameroon, especially in the fintech space, it's quite hard to place your finger on the exact regulatory environment. But oftentimes, founders and businessmen, they actually get their bases or their headquarters in other countries which have better regulatory spaces, like France and the Netherlands and Ireland, the UK, in the US. And they now create maybe a subsidiary in Cameroon or a branch or something like that. And it makes it really easy. Like there's a recent startup, Ejara. They've raised like $10 million in funds so far. They started in 2020. They are currently based in France, but they are operating in Cameroon. So that's like the best way to get to incorporate fintech products in the overall, should I say sub-Saharan Africa? That South Africa is quite different. South Africa, Mauritius, Egypt, those ones, they have like quite definite regulatory landscapes. But for the most part, the rest of them, they don't really have that. So the best idea for founders is often to pick a country that has a good regulatory environment and base there, and then like operate now in Cameroon or other West African countries.
Okay. I find it fascinating because I often hear people talking about Africa almost as though it's an individual, it's a single country, whereas the reality is it's 28 countries, if I remember correctly, and they are quite diverse and different. So as you say, like historically, Cameroon's got a long-term connection with France, which I guess explains some of the nature of spinning companies out. Then you take a look at, as you say, like North Africa and Sub-Saharan. So again, Algeria, Morocco, Tunisia tend to be quite France friendly or France aligned. I did some work with one of the financial regulators in one of those countries. I won't say which, and it was interesting that a lot of their stuff was modelled on a lot of the French things. But then as you work your way down through the continent, and you start looking at the other end, South Africa, which tends to, again, it leans on its Dutch and British heritage, I guess, in terms of regulation, that kind of thing. So I just find the whole continent fascinating because everyone seems to group it into this one big mass, but it's actually very diverse. And I know people are doing projects in Mauritius and Zanzibar, and they're doing some really innovative things in the crypto space. And likewise, you look at the payments that are going on, crypto payment space in Ghana, Kenya, and to some extent Nigeria. A lot of it that seems to be driven by the telcos, so the mobile telephone operators. But yeah, fascinating. That's why, Perry, I'd love to learn more about what's going on in your country and region.
Well, it's a common misconception by people that Africa is one country.
Yep.
I've experienced that a lot, especially when I studied like with foreign students. It's really it's really fascinating that people think all of Africa is like one.
Yep.
But in reality, like you mentioned, they're quite diverse, and there's actually many different countries. And contrary to popular belief, well, most African countries do like pretty well. Like I think the startup that I founded, what really inspired me is the hunger to invest by most African parents. I think there's been a lot of like crypto scams or maybe like these Ponzi schemes, and they get to like flood into it a lot. Like they know it's risky, they know it's going to stop at some point, but yet they still put in hundreds of thousands of francs, and that's like thousands of dollars. They keep pumping it into the system, and it really fascinates me because oftentimes international bodies, or let's say most people from the West, they don't really get to like identify these particular behaviors in most African people. And particularly, you mentioned the long-term relationship with France. Yeah, actually, Cameroon is basically 10 regions, and 8 of them are French, basically, and 2 are like Anglophone.
Okay.
But we're mostly bilingual, or mostly bilingual. So it's really a fascinating continent, fascinating country. And I think Kenya has been like the recent fintech capital of Africa, as they call it, because a lot of fintech projects, startups have been popping out of there. And like there are different countries that they are like the West or the America of Africa. Like you have South Africa, you have Mauritius, Egypt, like you mentioned. They have like really stable regulatory landscapes. Really, like everything is really put in place quite well. And if you wish maybe to establish a project, an entity, it's quite easier there than the others. But still, the others are gaining rapid adoption, really rapid adoption. I think I've seen the rise in crypto payments just around here, like quite enough, like quite a lot. And that drift towards the crypto space is what really what really created some skew from our initial plan, because definitely we were a TradFi, like a traditional finance kind of startup. But we are now moving towards DeFi because apparently it's gaining a lot of popularity, and it seems like Algo Dynamics is doing really well in that space. Like their recent partnership and the adoptions it's really been interesting. So yeah.
Okay. So
Can I just ask, what does the company do?
So basically, we're out to let me shorten it, to save African parents from bondage, because oftentimes African parents, they work a lot but they don't really get like good retirement, and it's really a bad thing because, for example, my dad is about 50 now, and his retirement doesn't really look as good as it's supposed to be. And even what the government is doing, basically they give like $84 per month for like when you retire for I think like the next 10 or 15 years. And that cannot really maintain the lifestyle they have or even give them a good life after. Even veterans, like it's really, really bad. So African parents seem to tend to other financial products. Maybe like sometimes they get to real estate, which is quite good, but it's very, very expensive, as you may think. And some of them get to like maybe jump and maybe rely directly on their kids because they get to sponsor their kids for like long terms in university, maybe send them abroad, and they get to depend solely on their kids. Others just remain like that and get to like live and suffer on the small peanuts that they get from the government. Well, some others also get into Ponzi schemes and crypto scams, but we're trying to solve that problem and also like give like even the general population some investment opportunity, because we have Ejara. Ejara is doing well there. Basically, what they do is they just provide a way for people to easily like invest in crypto, but we want to automate the process. We want to leverage maybe technologies like robo advisory services and even some of the good work Algo Dynamics is doing to like create a product that can actually automate this process and solve the whole problem, because it really goes deep. And one thing we've done like quite some research into that space, and the adoption is really, really high because you have government workers. They've really shown like positive regard towards our work, and we even have like already prospective clients. Like there are people that like we have over 100 people that if we release the product now, they are really going to like just jump directly into it because it's like the really safe option. But it's, as you may imagine, it's really hard provided the regulatory landscape, provided the lack of resources, provided the difficulty in getting funds based on the geography. It's really been hard, but we're kind of pushing.
So what is it effectively, Perry? It's an investment platform you're developing. Yeah. Is that a way of describing it?
I'd say it's more of an investment management platform or company, leveraging AI and machine learning to automate the whole process.
Okay. So basically looking at ways of increasing the return that people will get on any funds that they deposit then. Exactly.
Because average ROI from a bank or maybe like APY, it's like between 2 to 5%, and that's quite small. Yeah. It's quite small. So if you could get that up to like maybe 25-30%, or even 15-20%, it's really, really a huge increase for most African parents and really suitable. So that's what we are trying to do.
So
So,
how would how would the
go for
machine learning be used then um to actively manage the portfolio?
Now, what we're trying to do is like we figured out that it's really hard for us to build some core technology, you see. So there's already companies that are actually doing well in that space, like building the machine learning algorithms, like they've been training it for like decades now and stuff like that. So what we want to do is we want to like leverage like their computing power and their algorithms to maybe like create some front end product, you see, like some user application that leverages that in the background as the core. And like like the urban advisors work, like they diverse the portfolio, they rebalance it from time to time, and
Yeah.
they get to like take those various decisions and stuff like that. So we want to leverage some core technology that already exists, because it's going to take a long time to train us and to build us. It's resource intensive, time intensive. In fact, it's really hard to get to do it by ourselves. So we're trying to leverage that resource, that intensive computing power, proprietary software, maybe of another company, and then like maybe build some front end that could really manage it.
Right. So you want a front end that is accessible to the retail investor, to the public?
Exactly.
Right. Okay.
Exactly.
What's the downside for the public? If let's say individual A puts in $100, is the downside that they'll get their $100 down and they can make an upside to it, or could that $100 go to zero? What's the maximum downside?
Well, we are trying to make it quite safe, because we're talking of people's retirement here. So basically, we're in TradFi because traditional finance, well, it can be regulated and the losses could be really minimized. But with the recent development by algorithmics, as I like to point out, it's really been interesting, and provided the flags that they give like up flags and down flags, we could get to leverage that to make sure that the losses are quite minimized. Like let's say if individual A put in $100, for example, we want to make sure that it either remains at that amount, or like in the worst case scenario, it could go just down like maybe between 2 to 5%. That is like worst case scenario. And over time, as maybe the algorithms get to work, it really gets to be recovered, and like not just being recovered, but as it compounds over time, it gets to like provide that maximum return that it gets to have, provided it actually get to like maybe provide maybe monthly investments or weekly, depending on how much they earn, and depending on maybe like how depending on their financial situation, if I may say.
I'm only
So
asking.
basically,
Sorry, I'm only asking that because you're targeting people to basically be able to save for retirement, and they're usually very heavily regulated. And the one thing regulators really look at, the product must not be able to wipe the person down. So if you say, okay, the maximum down is going to be 5% or whatever, I don't know how it works there, but in the UK you've got the pension body. And if your pension's wiped out, they pay you up to a maximum, I think, of 85, something like that, thousand or something, depending on how much you have in your pot. So if you have like $1 million in your pot, you only get 85,000 back max. That's how the regulation works here. I don't know. In the US, it's more of the 401k, so it's more of a tax play. So I was just wondering how the regulation works there and how this product would be able to fit within the overall regulation.
well, I must point out that I think we're currently doing like we're trying to get the facts right in that domain, like get to actually point out exactly what regulators are looking for, because I think I'd like to think that we're not the only ones who have tried to do this. So we're trying to get previous data and trying to research to actually get to find out exactly what this is, because for now it's really just the idea that we have, and we're trying to establish it, and we're trying to like do much research in that phase to get to understand the situation and then find out how we can better fit a product into it. But with the past we've gotten, it's really apparent that it's quite possible.
Perry, how far along the journey are you then? You just researching this as a concept and looking for options, or do you have a platform that's being built out that people can look at?
Well, currently we have a team. We have a dev team currently building the MVP. It's been slowing down because, well, most of us are college students, but currently we're building the MVP, and we have a lawyer who actually gets to provide those, but since, well, we're not exactly paying him, he's really been like, slowing down the overall process. We promised him equity, like, but he's, they don't really get to like share the same vision. He just like, all right, he's just going to be the acting lawyer. Perhaps if we have maybe like deals to sign, he can just like review it and stuff like that. But he doesn't really actively provide us insights, which is really a bad thing. But we are struggling by ourselves, and currently we are working on the MVP. It's taken a while. We've been on it for, actually we started in I think April. We had to do some research to get to like confirm the concept, like maybe the idea. We did a research. We got a lot of validation from a lot of parents, a lot of workers, civil servants, and we started working on the design. Started struggling for partnerships and funds, and yeah. So currently we have like the prototype is not ready yet. It's really just like I'd like to say it's like 15 to 20% done. It's not really much, but we've been planning to apply it to Y Combinator. Perhaps they could really assist in that. But as you might imagine, it's really hard. It's really hard to actually get to put this all together.
Well, it's fascinating as well. At least you're having a conversation with a lawyer.
True. And just to add in on the lawyer, shouldn't be you shouldn't feel bad about that. That's lawyers for you. It's a good start for you to learn like this, because as time goes on, you learn that lawyers just love to say no. They will be holding you back consistently. That's just they're very cautious. Whereas us builders, developers, we just want to go. So it's kind of a good learning curve.
Yeah. The other thing I'd offer as well is that people always think that good lawyers are expensive. And I always say to people, if you think a good lawyer is expensive, you don't want to know how expensive a bad lawyer is going to turn out for you. So, getting good legal advice is absolutely invaluable. And the number of projects I've known where people have kicked off and they've gone at it from a technology angle, and they think they're solving the world's problems and everything. And then you say to them, have you spoken to a lawyer about this? Because, I think you're probably breaking a few rules here and there. And I know one project where they spent, I think it was about $50,000 already, and they'd not spoken to a lawyer. And I said, you need to speak to a lawyer about this, because I think you're going to be breaking the law with what it was. And sure enough, they went away and checked, and they said, yeah, thank you for that, because the lawyers told us which rules we were going to be breaking. We couldn't work around that. And so they'd sunk $50,000 without thinking of the regulatory aspect, legal aspect, or anything. So it's always good to be aware that there are rules and laws around, and whether you're doing a traditional finance project or a crypto finance project, and crypto people seem to keep thinking that the law doesn't apply to them. It generally does. So interesting, Perry. Thanks for sharing.
I've just got a funny story about lawyers, actually, because if you watch Netflix, there's a documentary called Bitcon, and it was a group of young kids who set up a crypto venture, and they were very, very good salespeople. So they set something up from scratch. People buying into crypto. They even actually managed to raise money. They set up a fake profile online with LinkedIn profile saying that they'd been educated at Harvard, etc. And their CEO was actually some professor in Australia. They'd nicked the picture and just given him a fake name. And the funny thing is that they hired a lawyer who they thought was representing them, but it turned out to be a young kid operating from his bedroom. So, so they hadn't done due diligence on the lawyer, because then they eventually, once they were getting sued, they had to hire a real lawyer. And the guy that they hired eventually said, I've tracked down your lawyer that you had. He doesn't have an operating license. And they tracked it down to some young kid who was about 16, operating from his bedroom, was acting out as their lawyer. Before they actually got the real lawyer who, and the funny story about that is that there were about 3 guys who teamed up, but the guy who probably committed as much of the fraud as anybody else actually got off scot-free because he did a plea deal with the US government. And he's the one talking on the Netflix documentary and showing off about what he did and, all the money he made. But he walked away scot-free. So definitely very entertaining, but just a word of caution about lawyers. Definitely hire a crypto lawyer, but make sure he's legit and not a scammer.
Yeah, it's one of those things that people don't always give that the consideration it needs. And I guess Cameroon, you may well be operating in a somewhat different regulatory environment to what some of us in more westernized, more regulated countries experience. So there may be more flexibility for you, I guess. It's a bit like in some countries, you can do anything as long as there's not a law preventing it. And in other countries, you can't do anything unless there's a law allowing it. And I suspect most African countries are going to be more of the you can do it unless it's illegal type of thing, which gives you a bit more flexibility, which is good. So, we wish you well with that, Perry. And when you're at a stage that you want to talk a bit more about it or share some details, please do come and tell us more about it.
I mean, the only comment I'd like to make about Perry's stuff is obviously because I'm a dev myself, although I don't have a huge amount of crypto development expertise. Is you've got several hurdles. Obviously, the MVP that you're trying to build, it's going to be the front end that people can use, but that's got to link into some kind of investment engine that actually does the managing of the portfolio and that kind of stuff. And you said that you would bring on board other people's technology. So I assume you'd have to deal with somebody. So your front end links into their back end. Then you've got to get through all the regulations. Obviously, once you've got an MVP of some sort, I would have thought, I'm not an expert again in this area, and I'm not trying to give any kind of investment advice, but the way to accelerate it, I assume, would be to bring on external funding. So that would be the way to, really turbocharge it in terms of you've got your MVP, but then to take it to the next level, somebody puts in a substantial amount of cash, and then you can upscale your development team and, get offices and all that kind of stuff. I assume that would be the way forward. But then, obviously, when people get to that stage, it's sort of having to give away some equity in order to scale up the business, and that's a decision, obviously, that you have to make at that point. But I think you have got several technical hurdles, obviously, A, in terms of your front end, B, in terms of some kind of sophisticated AI management system, which you're saying you're going to try and use somebody else's. But if you had to try and develop that from scratch, that in itself would be not necessarily an impossible task, but you could be there for years trying to develop your own kind of, hedge fund style AI engine, which manages crypto assets.
I guess the other thing, Perry, you mentioned about looking at going on to like a Y Combinator program, which is a great way of trying out some things in an environment where you're supported by people who are familiar with the startup space, the financial space, and also potentially gives access to investors as well. So that's quite a nice thing, providing you can get onto a Y Combinator program. I guess I think they're quite competitive in terms of what they do these days.
Yeah, it's quite competitive. Like when I see like the percentage of African startups being taken into the program, it really discourages me. But I remain quite strong, and I just believe that it's going to work out someday because I've seen it work. Like I often like to learn from those around me, because when I see someone doing something and it works and it's something that is really, really promising, it's a new environment, I just know that if I put my mind to it, it's going to work, as well as my parents also tell me, if you put your heart to anything, it's going to work out. So Ejara is doing it, and I've not really received any backlash from the regulatory environment, and it's really created that sense of possibility in my mind, you see. Mm-hmm. So and speaking of our own proprietary technology as the core, as the engine, it's a good idea. It's something that we're really heading towards. But to start, it's really going to be hard. We just think it's going to be hard. But I think from the way he explained it, I think it's not really as hard as it seems. Because provided we outsource funding, which is not really much a problem, because I've seen VC firms in Africa that offer, for example, like $50,000 for like 20% equity. So when I see deals like maybe YC offering maybe like maybe $500,000, maybe 125 for 7%, and then the other one for like the best date and stuff like that, it's really like 100 million times better than whatever we have, especially with VC firms around here. So if it means giving up some equity, even up to like 15%, it's really, really great. At least it's not going to cause that much dilution in equity.
Mhm.
So as long as, because it's really a dream that I wish to see come true. So even if it means giving up some equity to some third party or some external investor, it's really not going to cause much of a hurdle. I just wish to see the dream really gets accomplished.
Well, I guess you've got a better chance of succeeding by at least trying. If you don't try, you're definitely not going to succeed. If you do try, at least you've got a chance of succeeding. So that's really good. And I think one of the things that carries a lot of startups through in their early days is a few things really from what I've seen in projects. One is having a vision or a dream, and the other is having founders who've got the passion to make that dream happen. So if you've got that passion, you're well on your journey already. It's just about a matter of finding others who've got a similar passion, similar enthusiasm, finding the people with a technical capability, and finding some money to actually turn it into a reality as well. So it's not impossible, but people do it. It's just not easy either. So that's just the nature of it.
Just to add a bit, I mean, this is not advice. I'm just telling you exactly, what I've seen going on and what goes on within the industry. So you want to give up equity, which is okay. I'd say cap it at 10%, because at the moment you're in basically you're looking for seed funding, because 50,000 is not a lot of money. That's seed funding, and that the reason you want to keep it at 10% or below at this level, it's if you then get it, let's say, into Y Combinator and so forth, they're going to want obviously to take a percentage, and then you're going to look at the Series A if you're successful, and that can basically, they're also going to want to take a percentage. What usually happens is people give away too much of the equity too early in the game. So your biggest equity at this early stage are two things that obviously your time, but it's making sure you have an MVP. People love an MVP. You can talk to them about what you're doing all day long. As soon as you show them and they can understand it, they get very excited. People love that. So once you've got that MVP, people love that. And then the thing is this: a lot of people thinking having the MVP is the end. No, it's about the stats. So if you're showing growth, week on week growth, or month on month growth, whatever it is, maybe you're going from 1 customer to 2 customers, 4 customers to 8 customers, 10 customers to 50 customers, whatever your growth rate is. Once you've got your MVP, they'll look at your growth as well extremely. If you've got growth, you're really on a good trajectory. That's all I can say. Really, that's what I've seen in terms of really early stage companies, the ones who get funded, the ones who get into top level boot camps like the one you mentioned, because there are a lot of other camps that just because you'll see some companies who they would have done 7, 8, 9 boot camps, and you're thinking why? It's because they're going to the low level, and and I don't know, they don't get what they want, and they think, okay, we'll try another one, rather than focusing on getting customers. Once you have your MVP, work and make your product better, but also get customers. Once you have traction, whoever's got money they'll be running to you. So that's one thing I see. People spend too much time once they've got the MVP on trying to convince VCs or early stage funders. And the early stage funders are really looking at the traction, because now you've got something out there. They want to see, okay, what does the public think about it? So that's really all I can add at this time.
It comes down to the ultimate purpose of an MVP isn't actually to demonstrate a product. It's to demonstrate that there's a demand for a product. Because you can have the best solution in the world, which can be amazing, but if no one's willing to pay for it, then you're not going to make money out of it, and investors don't like that kind of thing. So, but Perry, hopefully there's some thoughts and ideas for you there to mull over. I'm sure you've been through much of this already,
and hopefully you can bring the MVP here and we'll have a look at it.
Yeah.
Yeah, that's for sure. That's for sure. I think here will be like the first place where we get to present the MVP, because I think I really enjoy your insights. I really appreciate your ideas, your thoughts about it, your industry expertise. It's really great. And actually, we got like there's this venture firm in the US, Westmount Ventures, I think, Westmount Capital Ventures. Basically, they were basically like our fundraisers because they're our venture partner. They were actually seeking to raise us $1 million in funds, but apparently it was going to take between, I think, from our calculations or based on their history, between 6 and 9 months or 6 and 12 months. So currently they are trying to do something as well. But I don't really want to hope much on them because it's really been I've researched about their portfolio, I've seen their work, but they've not really onboarded like as many African startups. In fact, none actually. So they were just a second option as well. But we had they were our venture partners for, in fact, they are currently our venture partners, but their work has really been slow. And from the meetings that I have with the managing partners, it doesn't really scream like, hey, we're actively working on your fundraising. So
Right.
that's why we decided to like take it into our own hands, try to like get our MVP, try to get some concept validation from a couple of clients, and then like try to work it out. But yeah, we're on the journey, and I think when we get something demo-able, here we're like the first place where we get to present it. So
Excellent. Looking forward to that. That'll be really good and really interesting. So thanks for showing that. I guess the other things, Barry, just quickly, we'll probably have to close on this and we'll move on to another topic. A couple of other things to think around the investment side that I've seen in the past as well is that investors quite often, the right investors, bring more than just the investment. So if you can hook up with investors who have got exposure in a market where they can provide introductions or they've got access to other markets and that's where the real value can come in. It's not just the money that they're putting in, which makes a difference with investors. It's what they add to it as well. And then the other thing, which I'll suggest just before we finish on this maybe, is that founders don't like giving away, in inverted commas, 10% of the business or whatever, but releasing 10% of the equity in the company of a company that's worth $1 million still means that you've got $900,000. Whereas if you don't release the equity and you don't get the funding, a project that goes nowhere is worth nothing. So you're still better off with the funding type thing. But lots of things to consider about, and I wish you well with that journey. And yeah, when you're at the point where you've got something that you can demonstrate, please do come back. We do our Gone in 3-minute session where you can actually do a present or talk about what you're working on for 3 minutes, and then we can potentially do a demo and that kind of thing as well. So that'll be something to look forward to. So moving on, as well, we've just been joined by JT. Hey JT, good evening to you. JT's wondering what on earth we're talking about this evening.
Hey guys.
Hey, welcome aboard. So are you back in the UK at the moment?
Yeah,
Yeah.
pretty much for about a week already.
Okay, cool. Yeah, you're not taking advantage of the newly announced VAT advantages for cryptocurrency in Abu Dhabi then? Just thinking.
Then you announced what?
So was it Abu Dhabi that's just announced that they're making crypto payments VAT free or something? And
Oh yeah, UAE.
yeah.
VAT.
Oh, the UAE, sorry. Okay.
No, Bitcoin transfers and conversions. I don't know about all the other crypto.
Okay, fair enough.
I read about Bitcoin transfers and conversions. So everything else I don't know.
Yeah.
I just did a quick Google as well. That as far as I'm aware, in terms of legal currency, there are 2 countries in the world, El Salvador and the Central African Republic, that actually use Bitcoin as legal tender. So interesting.
Yeah, and the IMF this week already trying to engage with them again, saying this is not a good thing. If you want our money, you need to reevaluate.
Yeah,
very weird.
El Salvador's president has been quite forward in promoting Bitcoin, and I think that they're quite a substantial holder of Bitcoin at the moment as well.
5,000 and something. I think they're buying one a day.
Yeah,
I'm not mistaken.
But you're absolutely right as well that the International Monetary Fund does not like countries who start becoming autonomous in some way and de-link themselves from the fiat world. And so I still fear at some point that that the two countries that you mentioned, Manny, Central African Republic and El Salvador, if they keep on with this journey towards crypto, I suspect that there will be events that happen that will encourage them to change. I won't be more specific than that, but it would not be
I was
good.
reading something as well about Salvador that they are going or they are talking about changing the constitution to allow the current president to continue more terms, yeah, because everybody likes what the guy is doing. So I wonder where that goes also.
Yeah, but that's dangerous territory. That's dictator territory. Changing constitutions to stay.
It's not him. It's not him. It's the people.
Well, all dictators say it's the people.
No, it's actually the people. It's not him. He says he's not considering at all.
That's good to hear.
Yeah, other institutions and everyone is pushing the guy to go forward with that. So he probably feels the same way. It's not a good thing to change constitutions, because it's like you said, today you have a good guy, tomorrow you could have a bad guy, you know. So
but it's certainly worth watching what's going on with that, because as was the case when they started announcing that they were buying up Bitcoin and then the price went down, there was a lot of negative comments about how the president was basically bankrupting his nation and everything. And then the price of Bitcoin started creeping up again, and you're not hearing that anymore. So kind of interesting. Maybe he was doing it at a massive scale. Manny was mentioning the concept of dollar cost averaging earlier on. And I wonder if in a way that's kind of what El Salvador was doing for a while as they were buying into the market as it was dropping. So yeah,
just from Googling doesn't seem to indicate that the Bitcoin experiment has actually been a success. From what the brief Googling that I've just been doing, it hasn't been a huge uptake of Bitcoin in El Salvador.
Well, that's the legacy media. Every time they speak about it, every time I see about it, they always have a negative spin against it. I mean, the one little thing they never say is this guy's been buying Bitcoin when Bitcoin was extremely depressed, even during the bear market. And so Bitcoin from when he started, I think, has doubled. And they never mention that. They always say, well, people aren't using it. They always have a negative. I have not seen a positive legacy media article about it. It's always been negative in terms of the legacy media. But that's my point of view. Could be different.
It could be a case of people who want to preserve the status quo, and people who like the current banking system don't want to see, it being superseded by something that El Salvador, brings into their framework. It becomes a real success story, and I guess the status quo, the banking system as it exists in most of the sort of Western world, could possibly be threatened by that.
It's interesting as well. You're talking about what the media is saying and everything, and Manny, you kind of triggered something in my thinking that you were saying, oh well, Google says.
Yeah.
So that's why immediately I started looking on DuckDuckGo as a different search engine, and it seems that there's some interesting stories in here that not all of them are negative.
Mm-hmm.
I'll go away and check separately what Google says, but again, it may well be a lot of people don't actually realize that Google is not a free flow of information. They're putting out what they want you to see.
Mm-hmm.
And so it could well be that they have an influence as to the positive items or the negative items, and in their own way that they're putting their perspective on it. So
yeah, so I guess what you're saying is take it with a pinch of salt. It's not just what Google says; it's what does Rupert Murdoch want you to think, or people of that kind of club, if you like.
But potentially, yeah, it's definitely a thing that. But people seem to think that you've got traditional media, which is obviously aligned with whoever the individuals are against that. or social media. But the reality is a lot of social media are equally aligned. So I would treat all of it with caution, whether it's social media, unsocial media, or traditional media.
Can I have a shout out basically? Zebu Live is going on this week in London.
Oh.
It's the Web3, well, they brand themselves as the UK's largest Web3 event.
Yeah.
Which can't be too difficult nowadays. But anyway, it's live this week. I think it's 9th or 10th. Let me have a look. 10th and 11th. Yeah, October 10th and October 11th, and so forth. I've got a code for some free tickets. I'm going to put in chat if anybody wants to go. They can add that in the promo class situation, and if you're around that area, you can pop in.
Yeah, that'd be great. Thanks. I mean, I did actually watch some of it online, I think, last year. That was quite interesting.
Excellent.
Yeah, I was there last year. I had good moments, and hopefully this year will be better, But I enjoyed last year. Actually, they did a good party at Coco, as well. That was really, really good last year.
Excellent. Well, yeah, just stick the link in the chat. It's always appreciated. That's good.
Have you guys discussed about BlackRock and their new stablecoin?
No, we haven't yet. I was going to first of all ask what this tweet was that you sent over. Should we talk about that? Talk about that first. Go on, JT. What's this all about?
Just something was flying around this week about Eigen. It's basically a guy that tricked the Eigen team to change the wallet address. They run away with a few million, I think it was 6 million or 7 million, I can't remember.
Yep.
It's just incredible. People still fall for these things today.
Wow.
Don't get it, So
that's unbelievable.
So Eigen was going to start distribute tokens to investors, and of course, these tokens had a lockup period, etc. Yeah? So there was this guy that contacted me and said, "Hey, I have a new wallet. Can you change it?" And that team changed it on the wallet, and the guy ran away with 6 or 7 million. Okay. It's insane. I mean, the controls they should have. Majority of these crypto companies out there, they don't have proper controls in place, I mean, I still find it unbelievable in 2024 this is happening, honestly,
Yeah, that's bad. So, okay, so that was that one. And then you're talking about BlackRock and the ETF. Is this the thing that had that fake spike?
Stablecoin.
Oh, sorry, stablecoin.
Yeah. So they have a stablecoin now.
Okay.
Good printing machine next to it. So expect some fireworks, I think.
So is that okay? I'm just checking if I can find any quick details on that. What were you just talking about that? So have they only just announced that then?
Yeah, USDB. It's not recently, but this week there was again on the news.
Okay. Because it's curious. I'm just trying to do a search on BlackRock stablecoin, and
maybe something called Athena. Athena is a company involved. I said Athena has announced a new stablecoin that invests its reserves in BlackRock's real-world asset fund called Boodle. I don't know if we're talking about the same thing here.
Yes, it's exactly the same one. And this week was again on the news. This week or last week?
Okay.
Last week.
Right, so I've got a news item on here, but it doesn't really give much in the way of details. Okay. Right, so what to go away and check into then?
Yeah, I mean, you look at me, I'm BlackRock. I have all of these trillions of assets. You can print now Bitcoin, collateralize all of these. Oh my God. I know I've been, I'm joking here, but man, I have a suspicion that with a printing machine, we might see some fireworks quite soon,
Yeah, because I was amazed at just how much profit Tether were making with USDT, and I'm fascinated about how you make money out of a stable coin, but they seem to be doing really well.
If you go to Tether and you say, hey, I want $1 billion in USDT, okay? Either you do a bank transfer or you give something, a collateral, whatever that collateral is, yeah? Could be bonds, it could be Bitcoin, yeah? It could be anything, gold, you give it as collateral. And of course, you have to, when you pay back USDT, there's an interest there that they charge.
Mhm.
So you could, it depends who you are, obviously, 3-4%, maybe more sometimes. So of course, then they have agreements with large corps and large hedge funds that have bots. I'm guessing a lot about this, but it's obvious because the bots are constantly bringing new USDT, to the ecosystem. So there's probably a lot of deals that Tether and other stablecoins do behind the scenes, and how they make money is interest,
Mm.
You pay interest to them.
It's certainly fascinating. Again, that it ties in with what I've been saying for a while about how the traditional TradFi firms are all building their crypto presence with these kind of things. So, interesting one. Thanks for sharing that. I think I had read something about that the other day, but it kind of like slipped me by as one of the big news items. But yeah,
I think Tether charges now 0.1%, if I'm not mistaken. Yeah. And they don't call it interest, they call it transaction fees, obviously, because they're not a bank.
Okay. And then I guess the other news item on the crypto side, and this isn't unsurprising, is the SEC versus Ripple case, where I think the SEC's gone in to plead against the case that they lost recently, and are trying to get that reviewed, but I don't think that comes as any surprise either. So,
Yeah, they're going for their appeal, aren't they?
Yeah, sorry, it's an appeal try. And I think that Ripple were kind of expecting that. So it doesn't come as a complete surprise. And Brad Garlinghouse, I think it's Ripple's CEO, has said that they'll defend and do what they need to do to defend the case. So, yeah, interesting. So not all quite over with yet as to whether XRP is a security or not. So we shall see from that. So probably a good time to finish there, because we've covered quite a few things there. We started with looking at listening to a lot of the work Perry's working on, developing solutions for what we describe as like emerging markets like Cameroon. Some of the regulatory things as well. JT, thanks for sharing the stuff around the new stable coin, the BlackRock stable coin. Really interesting one to finish with. So, folks, hope you've enjoyed today. We're going to have to close off, I'm afraid, because it's that time to finish. So, thanks everyone for joining us. Hope you enjoyed it. Join again next week.
Thanks, guys.
Bye all.
Bye.